Order flow, volume profile, cumulative volume delta, heat map, peak trades. These are the tools I'm going to utilize on my channel. This is a workshop for more advanced retail who are struggling to utilize these tools in their strategy. And in this workshop, we also learn how to use pending orders, limit orders for precise entry using fair value gaps. At Trading with Whales, we don't do back testing, we don't do market replay, and we don't look at the history. Everything will happen on live market, live execution. This concept, order flow, or using cumulative volume delta has so many variations that cannot be taught in only a few episodes in 5 minutes, 10 minutes, or even in 1 hour. Please be informed that trading has a significant risk. It's not a joke, and I'm dead serious about this matter. Therefore, help me to build this community where we can learn money management and build green statement over time. So over here, we're looking at NASDAQ micro. A big sell-off were happening in the last few hours. As you guys can see in the chart, the sell-off is intense. London pre-session, 2 a.m. Eastern time. The time factor is very important here. I wouldn't utilize this fair value gap to enter a long position if it was any time before 2 a.m. At 2 a.m., new money injects the market. That's London pre-session, and it continues during London. But it doesn't mean the low the price made during pre-session at 2 a.m. London would respect it. Sometimes they are building baits and traps during that time. We are into London session. On my chart, I have volume profile. This volume profile that you see is set to every hour. But on the left hand side, I have another volume profile. This is fixed volume profile. The value area low is providing support to the price at $29,374. Point of control is where the most trades are being executed. That's this area. And usually the price tends to go to point of control because that's where the most of the liquidity is there. Over here, we have 2 bearish candles. I would like to mark it. When I teach what I teach in this channel, I presume that you guys know already about what is order block, what is trap buyers, what is trap sellers. But if you guys don't know about this concept, you can visit me live on my other channel, FX News ME, or search JJ Edwards and ask your questions there. I am highlighting these 2 bearish candles. Let me move my stop for now in here. We have equal highs at around 29,442. For the price to go higher, you see that over here we have a breakout. That's engineered liquidity for buy side, if you guys are into ICT. So these 2 bearish candles must hold. If it doesn't hold, we just get our stopped. So over here, I would like to move the stop to the close of these 2 bearish candles. In an uptrend, every bearish candle or a chain of small bearish candles represent trapped sellers. In this leg, we have 1, 2, 3, 4, 5 bearish candles. These 2 are trapped because we know the price went above it. Therefore, the price should not go below 50% of this range. The risk is $50. The profit should be 1 to 2. I can move the stop below these 2 red candles. It would be better if this candle would have taken the low, but since it doesn't, that indicates the bullish momentum can be even stronger than what we expect. Furthermore, I would like to look at cumulative volume delta. That's a very good tool that we are using in our favor. Here in the CVD, the low of CVD and the low of the price are synced. Therefore, we are not in a manipulative market. When lows and highs are synced, there's no divergence. That indicates we can rely on inverted fair value gaps, highs and lows, and knowing, okay, right now we are not in a manipulative market. Where the price is approaching our take profit level, In the comments, let me know what you guys need to know more about order flow, trading, and perhaps ICT strategy, because I mix ICT with order flow, and that makes it a very, very good strategy, to be honest. So over here, we had a bearish leg, almost began from here. So I would like to use my VWAP anchor to this high and see if the price is right at the VWAP. Therefore, a bounce is expected. I wouldn't be surprised if the price goes ahead and stop me out, but I can always re-enter. If I had two micro contracts, I would exit one at VWAP. Another VWAP I would like to utilize is to put it to the lows, and my VWAP setting is set to close. We had another bear trap in here. Now we have equal highs, a legitimate target. Perhaps it might want to do a bull trap above this high and then have bearish leg. Therefore, we are going to monitor that as well. Another thing that I took this buy order is by measuring how much volume we have at these lows. So if I use my profile anchored from this pivot high to this pivot low, before this portion starts, the point of control is right here, 326. But once I push it forward, you guys can see that the point of control is right there and stays there. Since the point of control is staying there, that means they are accumulating, and the value area low, look at the value area low. Look at the, as I push the volume profile forward, the value area low, look at that. Value area low is supporting this fair value gap or this price range, and then I executed one micro contract in this portion. Volume profile from pivot highs to pivot lows also provides us valuable information about where to enter or where to set our pending orders to have a minimum risk. Okay, the price is approaching our target with speed. Now I can move the stop below these three bearish candles. Again, same scenario. If these three are bait and trap for sellers, if they are trapped because the bulls are utilizing these sell orders to fill their buy orders in order to push the price higher. So this is like a temporary fuel for bulls. That doesn't mean 1, 2, 3 bearish candles can provide a significant rise, but maybe at least the same range. So if I put this range on, if this is the range, the next would be around here, same as these bearish candles. Once inverted, you guys can see that the price tends to at least feel, couldn't even feel 100%, but feel partially. So each and every bearish candle or chain of bearish candles can potentially result in the price to at least go 50% of this range above it. Okay, the order is filled. The second attempt was also a win. This was very easy trade. We had a bounce up. The price went all the way beyond these 1, 2, 3, 4, 5 bearish candles on this candle, even going above half or 75% of this chain of bearish candles is enough for me to have a signal for reversal that indicates this chain could be only bait for sellers. I decide to go long on the second candle because I have seen strength or aggressive buyers are coming in. The price dipped again, went even below the gap, but my stop was at the close of this bearish candle. Went very close to it, but inverted and start speeding up. Closed that order above this candle because this is a bullish candle which resulted the price to rip lower. That makes this an order block for trap buyers. But the price ripped through it. Once it returned back to these two chain of bearish candles and start going higher and took that last profit at $29,446. Now every day we look our journal on this new trading account. So let's go to journal. Here we are On Trading Journal, it's May 2026, May 15, $287 on today's trade. 2 trades, 100% win rate. This is for educational purposes only, so I can show all these trades in action. We're going to have loss, we're going to have wins, and we're going to learn how to manage these risks together. If you liked what you saw in here, please hit the like and subscribe button. It will encourage me to make more videos like this. Trading is not hard, but it requires a discipline that we are going to learn together in the new community that we are going to build. Until next episode, stay safe and stay observant.